Yeah, well, I guess it could be worse. Anyway, Joya, thanks so much, as always. Joining me this morning from Boston is Todd Campbell, partner at Alpha Research Group.
Hello.
Hello there. So we've been all morning long just talking about, what we can expect on what is considered by many the first real trading day of the new year. Again, this kind of mixed read from the futures this morning. What do you think is going to confront us in the next few minutes when that opening bell rings?
Well, one of the things that we find interesting, our work has been pointing down since moving off a very overbought condition back in November 28th. And at that time, we had about 74% of our universe buy rated. We're now down around 43%. But typically, significant bottoms don't occur until you get down around 20%. So we're still looking at some market contraction and some risk early on here in the next couple of weeks, I would imagine.
Well, I'm glad to hear that in a way, because not that I want tech people to hear bad news, but I think they should hear cautionary notes as well. And for example, Tom McManus over Bank of America Securities, a closely watched strategist, upping his allocation to stocks again. You're saying you've gone from 74% buy rated to 43% of your stocks buy rated. You expect to get down to 20%. I know other people, though, who do think there's one more big downdraft in this market before we have the up move. And I just keep wondering if that won't have something to do with a potential war in Iraq.
Oh, absolutely. I mean, you look at the gold sector. Gold went to a buy in our work on December 3rd, and that's only a few days after we topped with that 74% rating at the end of November. And gold remains the top sector in our universe of 36 sectors. So until gold starts to decline relative to these other groups, it's hard to imagine that the aggressive parts of the market are going to participate.
Todd, explain that to our viewers, why gold tells us, why a move up in gold tells us that the rest of the stock market probably really can't do that great.
Yeah, well, there's an inverse relationship between the aggressive parts of the market and the gold sector. And typically what happens during periods of uncertainty is money flows into the gold sector and away from sectors like biotechnology and semiconductors and technology-related stocks. And yes, we have seen that since, I'd call it the middle of December on through even to today. So I think that, watch that relationship carefully as an investor, because that's going to give you some good clues on whether or not it's safe to start to go back in and buy the market.
And of course, geopolitical tensions, the weakening dollar, big reasons why people are moving in to gold. A lot of people seem to think that $400 is an attainable level for gold. If nothing else, they look back to 1991 during the Gulf War. Gold got easily to $400. Do you think a move up to $400 in gold is possible? And once we get there, if we do, will that be the bell ringing that gold's heading down and maybe the stock market can start climbing again?
Yeah, it's funny. I was talking with some very bright individuals about this very issue, and they're saying similar things. They like 360 as possible resistance. They say 400 is possible resistance. Our work really just keeps people focused on what's working. And when gold stops working, we'll let people know. But right now, it's still suggesting that you're a buyer of stocks like Newmont and Harmony.
Okay, well, Todd Campbell, right now, I'm afraid we have to go. But thank you so much for joining us. Appreciate the setup.
Absolutely. Take care.
Set up for the opening.